Part 17, MA, MasterCard Incorporated. Here's a disclaimer. Ticker MA. We're going to go to sec.gov, go to the 10K filing. All right, MasterCard. They have some notes that are due. They seem pretty good in terms of interest rate. I mean, I'll take money at that rate. Oh my, this is quite organized. Usually we go to item 8. That's the financial statement, yeah. Consolidated, we want balance sheet right over here. All right. Total assets of 48 billion. Plug that in. Find goodwill right there. There's goodwill. That is really high relative to the assets. That's almost, yeah, like 20%. They must do a lot of acquisitions, I guess, of smaller credit card type companies. Total liabilities. They might use debt financing for it. This is all speculation. I'm not actually sure. I haven't looked into it. But let's just go by the numbers. All right, so we're getting a negative net asset value for the company. So what they've overpaid for in premium for acquisitions plus the liabilities relative to their current assets, you get a negative value for the company of about 2.5 billion. But this doesn't incorporate the cash flows. So let's go down and try to find. They have additional paid in capital. That's usually not good. That means that a company is typically running at a deficit of some kind, and this is how much they've had to issue shares for. So I guess you could think of it as diluting shares. The opposite, the inverse, would be the stock buyback. So they'd be taking money, from the company and buying the shares to increase the value. About almost 13 billion though in net income. So the net income is very high. Put that in. Then we'll go to NYU Stern School of Business. This is probably like a lending company, credit card. Credit. No, lending. It's probably under some form of finance. Let's go to F. A, B, C, D. Not sure what kind of industry it falls into. I don't want to say it's in banking because it's not really banking. Okay, Money Center. It's more of a cards business, but I can see how it would be similar to that. We'll just probably go ahead and give it a 15 PE ratio. Give it a 15. Credit card or lending, because that's what it is at the end of the day. So we got about $206 per share. Anyway, let's go check out tip ranks to see what the industry professionals say. Oh, that's not what I wanted. Tip ranks. MasterCard. Whoa. $600. What's the current share price? That seems very, very high. Yeah, it's about 12 billion a year in net income. Almost 13. You're getting about 3 billion a quarter. But I mean, that's a good margin. 44%, that's really good. It's pretty consistent for between 44 and 47. Let's go further down. What is the consistently beat? I'd like to see a chart though. Google Finance, MasterCard. Google's usually pretty good for getting charts like this. Or yeah, bar charts. Annual. There does appear to be consistent growth for revenue, but I suppose the profit's also good. Balance sheet. I mean, this is kind of the stuff we've already went over. Cash flows. Oh, that's not good. These are kind of volatile relative to the other. I mean, this is all fine. This is what you want to see in a business. But, you know, part of it is also paying a good price. I mean, even if we bump this up to 22, I wouldn't want to pay more than $300 a share. It's not a bad company. It's a really good company from what you can see here. And the industry professionals seem to like it and think it can go to 600. That's less than 10% upside though. And, you know, if you got it maybe here at the beginning of the year around the 400s or over the past 5 years, you know, if you got it 5 years ago at 300 something, that would have been a much better price. But they are, you know, this is on the higher side, and I personally wouldn't be a buyer of it. And I don't think 10% is enough of a value play for me to purchase. Thanks for watching. I know my voice has been a bit muted this video, but I'd appreciate it if you like and subscribe. Thank you.